What's up everyone, and welcome back to Finance Flicks Hub. If you want smart market insights, real-world crypto updates, and strategy breakdowns, you're in the right place. I'm glad you're here today because we're going deep on XRP, where it stands now. What's driving sentiment, and what could shape its path soon? So grab your coffee, hit that like button if you love crypto content, and let's jump right in. 1. Current market snapshot and what's happening right now. First, a quick reality check. The broader crypto market is in a consolidation phase right now. Bitcoin BTC is trading near $87,000 to $88,000. That's after substantial volatility and a pullback from recent highs, which has left many traders cautious. For XRP, recent cycles saw a dip. Price got hit hard, along with many altcoins. As one report noted, large whale wallets dumped nearly 200 million XRP over a short period, creating supply pressure. As of now, XRP trades with a market cap ranking near the top cryptos. The circulating supply and liquidity remain significant. The key takeaway: the crypto market is shaken, but signs of stabilization are emerging, which means volatility may not disappear, but the market is starting to digest what it's been through. Recent price action and technical setup for XRP after that dump from large volume holders. Technical indicators flagged that XRP became oversold. The token recently tested support around $1.90, which aligns with a major long-term moving average, the 20-month EMA. That's a meaningful floor considering history. On the upside, resistance zones are in the $2.10–$2.25 range. Demand returns, whether from institutions or renewed retail interest, a rebound toward that range is possible. But, as always with crypto, and especially now, volume and liquidity matter more than just price levels. Weak volume can make rallies fragile. 3. Catalysts, ETFs, institutional adoption, and structural signals. One of the strongest bullish signals for XRP recently has been the arrival of regulated XRP-linked ETFs. That adds institutional legitimacy, which is key for broader adoption beyond retail hype. Institutional investment through ETFs tends to be steadier and less emotionally driven, which can reduce volatility over time and create a firmer base for growth. Combine that with ongoing conversations about regulatory clarity and real-world use cases, payments, remittances, cross-border transfers via the ledger of XRP, and you've got structural arguments that go beyond charts and speculation. 4. Macro and market-wide context. What's driving or holding back crypto now? The broader crypto market, not just XRP, has taken a beating in recent weeks. There's been heavy outflow pressure, big corrections, and widespread risk aversion. Reasons: rising interest rates globally, macroeconomic uncertainty, some institutional profit-taking, and more general risk-off sentiment among investors. That said, there are nuggets of hope. Some markets show stabilization, and sentiment could improve if central banks hint at easing or economic outlook improves. In that context, crypto assets with a real utility, plus regulated exposure like via ETFs, might attract capital faster once broader fear subsides. 5. What this means for investors and traders. Strategies. Risk management and mindset for traders short to mid-term. Watch key levels, especially support around $1.90. Resistance around $2.10, $2.25. Use those as reference points if you trade. Monitor volume and liquidity. Avoid entering trades when volume is thin. False breakouts happen often in weak markets. Keep risk controlled. If you choose leverage, size carefully. In a volatile crypto market, big leverage often ends poorly. For long-term holders, investors, consider using dips and consolidation phases as accumulation windows, especially if you believe in structural catalysts, ETFs, adoption, utility. Maintain a core position. Treat XRP as part of a diversified crypto portfolio rather than a moonshot. Keep informed. Follow regulatory news, institutional adoption signals, broader macroeconomic events. Long-term gains often come from structural shifts, not hype cycles. So overall mindset, don't chase FOMO. Crypto markets still move fast and unpredictably. Think in scenarios: best case, base case, conservative case. Be ready for volatility. Focus on fundamentals: utility, adoption, liquidity. These tend to matter more over months, years than daily price swings. 6. Why XRP? And what's the long-term opportunity? Unlike many other tokens, XRP and its underlying ledger is designed with real-world use in mind: fast settlements, cross-border transfers, liquidity, plumbing. That utility gives it staying power beyond just speculation. With ETFs and potentially growing institutional interest, XRP could benefit from fresh capital flows, something many altcoins without regulated exposure struggle to attract. A post-volatility environment. If macro conditions improve, XRP's mix of structure, utility plus regulated exposure gives it a shot at outperforming many speculative tokens. 7. Closing and call to action. So that's our deep dive for today. Crypto markets are messy right now, but sometimes messy markets create the best opportunities. XRP is a coin worth watching carefully. Key ETF-backed catalysts, real-world use potential, and a technical setup that may reward patience. If you want to stay ahead of the curve, keep following Finance Flicks Hub. I'll continue analyzing XRP, tracking macro signals, and breaking down what matters, not what's hype. Thanks so much for watching. If you found value in this video, please subscribe to Finance Flicks Hub, hit that notification bell, and leave a comment with your thoughts. Questions. I read them all. Let's take this journey together. See you in the next video.